Good now, revolutionaries, and welcome to the Rise Up Morning Show.
The Rise Up Morning Show.
Today is Wednesday with a W, August 20th. I'm your host, Evan. He's your host, Alex, and Will is getting a little beauty rest in prep for After Dark tonight, where we will welcome our friend DJ Willie Quiggs back to the show, a founder's founder, a true tech investor, and though he hates the word, entrepreneur extraordinaire. He will become the most appearing guest again tonight when he rejoins the show. So bring your questions. You know, whenever he comes, it's time to go to school. Alex, I know you got to get out of here. So instead of asking you for a final thought, I'd love to ask first, how are you? Thought. And then get an initial thought from you to kick us off this morning while I prep the audience to say, as he does, send us your questions. It's still Web3 101 Wednesday. If you've got a question, we want to hear it. You and I, my friends, will go through it together right after this message from Mr. Alex Popovich.
Well, rapid fire. How am I? Sore. Not muted on TikTok. Now we're good. I'm very sore because I had my first crash course in learning how to surf yesterday and I got my ass kicked.
Oh man, I forgot about that. That sounds just delightful though.
It was brutal. Yeah. The first attempt was with a longboard, didn't go well. Swapped that out for a very small one and then just got my ass kicked for like 2 hours. It was awesome, but I'm very sore.
I'm going to need you to learn how to do it because then you got to teach me. I have always wanted to learn how to surf.
Well, what I can say confidently is that I've been snowboarding for many years, wakeboarding for even longer, skateboarding, and on the pavement longboarding for a very long time as well. None of it translated at all. I was useless on a surfboard. So, there's that. So if you're thinking you're bringing your other skills, no. One of the guys that I was with out there is a professional snowboarder, and he also got his ass kicked. So that made me feel better. But yeah, just pulling sand out of everywhere for the next couple hours was fun. Other than that, good. Our house is about to be inspected as part of the sale, so we're just doing a clean, and so I'm gonna go do that. But just wanted to say good morning and say hello and say sorry for dipping out, but
no problem.
Got to clean a lot of house.
We had Tori in the comments say, "I'm jealous, like me. Also, would love to learn to surf." Maybe the play is you learn, we get together and have a meetup for the community somewhere where there's surfing, and Alex, you can be the surfing instructor, and I'll bring my guitar and we'll roast marshmallows.
Cam, we'll have Cam be the surfing instructor, and he also owns about 30 surfboards. I don't know why he has so many, but he's got a bunch. So that's where the party will be.
Wow, 30? That's all? Okay.
I mean, I'm exaggerating a little bit, but at least a dozen, probably more than a dozen.
Okay. Let me ask you, now that you've given an initial thought, I know you got to go. Do you have a final thought? A good joke, a word of wisdom, a prediction for us?
I have no idea what the markets are doing, but if the crash is deep, consider a purchase in the things you have high conviction in. And if it's up and I just haven't looked at it yet, consider profits, even if you have high conviction in the thing, because it's sketchy times out there and who knows where we're going.
Beautiful. Thank you very much, ladies and gentlemen. He's your friend and he was mine first. Mr. Alex Popovich, tell Christina, the dogs, Jordan, everybody to hold on and fight the good fight, and we will see you later tonight. Okay?
Sounds good. See you guys in a bit.
Awesome. Thank you very much. And thank all of you, wherever you are, whenever you listen. This is your show. We're doing Web3 101 Wednesday, mobile surf rental. I like the idea. The ocean, Exit Velo says, is like my happy place. You'll get it, Alex. It'll click like the rest of them did. I love those words of wisdom. Thank you very much. A question from our friend Bearded, who asked, he was surprised to learn that the average Coinbase account balance is under $5,000. Not surprising? Surprising? Let me know. Is that consistent across other platforms? That's a very good question. And with a little quick Googling, you'll have to verify this information, which means
Don't come for me.
and also fact check yourself, brother. But here's what we hear. That most Coinbase retail accounts do hold less than $5,000. It serves millions of people. That's the first thing to understand. And a lot of them are everyday users just like us. Most of them, they are buying, selling, testing the waters with just a few $100s at a time. Other exchanges like Binance, Kraken, Gemini, they show a similar distribution. There is a small percentage of users across all exchanges who hold very large, i.e. 6 or 7 figure balances. There is no particular exchange that serves more whales, we would say, than any other. And most of those exchanges, they have like an institutional or some other service, a product or service for people who are high net worth individuals, if only to give them like a customer service concierge. It's this way because all things are this way. You would actually find this is true at your bank too. They call this a power law distribution. There are a handful of big holders. They may make up a large percent of like the volume supply, the same way that a handful of people own most of the dollars in the world. You know, what is it now? Like the top 10 people have more dollars than the bottom 50% of dollar users around the world, something like that. One of those crazy stats about money supply. But it's not unstandard anywhere, even in crypto. Good question, Palmer. I'd be curious to know where you heard that. The follow-up from Palmer comes, so that means the majority of volume is institutions. Not necessarily, but it depends on what you're looking at. If you're looking at inflows and outflows for the initial wave of Bitcoin or Ether ETFs, then yes, that was largely institutions. Volume is tricky to measure when you're talking about exchanges, because volume is not about necessarily how big your account is, but about how often you are moving money. And I'd be curious to know, what is it you're looking at volume for? Are you trying to see which tokens are popular? Because if all those sub $5,000 accounts buy and sell and buy and sell and buy and sell, if they're doing a lot of trading, that could generate volume. There's an interesting stat that just came out in CoinDesk's newsletter today about recent Bitcoin activity, that it's coming from accounts, and this is just on-chain data, who've held Bitcoin for 155 days or less. They call this short-term trading. So those people may be trading Bitcoin frequently, intraday, several times a day. It doesn't really matter how much money you have, how often you move it. If you have more money and you move it often, then you generate a lot more volume. Our friend of the show, the White Whale, has moved over $1 billion in volume on Hyperliquid, even though their positions without leverage are several million. So you see, size is not really the primary factor in determining volume. Activity is. They work together. I hope that helps. And if you've got a question, don't hesitate to let me know. Have you looked, Solom asks, into Stakehouse high yield Morpho vaults yet? Yes, in fact, we have, Solom. One of the first times we looked at Morpho's platform, and we'll go there together now, we noticed that the USDC vaults were curated by someone called Stakehouse Financial. And in fact, this Stakehouse USDC vault has been a mainstay of Morpho since the protocol became prominent on Base. And it looks like right now, Stakehouse Financial has a 4.93% APY. If you want to see the screen share, head on over to YouTube. If you're listening in podcast land or you're watching on TikTok, it's tough for me when I'm driving alone to drive and do the phone screen share, but I'm going to try and narrate for you what I'm looking at so that you can understand it. Steakhouse Financial is a company like any of these others here, SparkDAO, Gauntlet is one, MEV Capital, that are doing the work to put together the contracts, the assets, the basket that you are buying into when you give your USDC to this vault. They are doing the DeFi work on the back end to lend it, to borrow it, to facilitate swaps that generate this yield. If you're interested in USDC yield, the other Steakhouse Financial curated pool that you might check out is their Smokehouse USDC pool. These are both really great pools in the sense that they have high TVL to be stable, $320 million and $169 million respectively. The yield is paid out in a blend of USDC and Morpho tokens. So this is a good way, if you wish, to accumulate extra Morpho tokens. And if you want to look into what it is that they do, what their collateral is, you can click into it right from the website to see how the vault is allocated across different assets. For example, when I click into the Steakhouse USDC, the 4.93% vault, it looks like it's a blend of 4 different pools. Most of it is allocated towards a CBBTC, Coinbase wrapped Bitcoin, and USDC market. This just means that your USDC is used to fulfill the swaps from that asset back and forth. Another big chunk of this pool is for wrapped BTC and USDC. So your USDC is helping to provide liquidity to facilitate swaps for Coinbase's Bitcoin product and the wrapped Bitcoin product. So strong tokens, high demand, high volume probably, because people are interested in using both of those things to extend their Bitcoin. If you have other specific questions about it, Solom, let me know. But we are going to have Gauntlet. Our friend John from Gauntlet is going to be on the show Thursday. And Gauntlet is like Steakhouse Financial, but they've been doing it for longer. The same way that Uniswap is like the king of decentralized exchanges, Gauntlet is like the king of DeFi curation. Steakhouse is great. I love what they've done, especially through Morpho. But hopefully John is going to be able to make some of the complex clear, to talk about what it is happening in the background when a company like Steakhouse lists a USDC yield opportunity on Morpho. It's a lot of math. It's a lot of coding. But I want to feel like everybody here has the opportunity to ask somebody who has deeper knowledge than me and Alex and Will exactly what's going on, because it's such a fascinating part of the mechanics that we use every day. So stay tuned for that. Good question. Here we go. We had a question from Zach. Hey, Zach, what's your favorite layer one this cycle? Man, Zach, this is so boring, but I got to tell you, my favorite layer one this cycle has got to be Bitcoin, ETH, or Sol. Short answers for both. Bitcoin is the little red wagon upon which so much depends. It starts the party, it ends the party, it takes everything along with it. And it's been fun to see big numbers on Bitcoin's scoreboard. ETH, because I feel like even though ETH is an established major altcoin, it is the secondary token to Bitcoin. It is the backbone, Ethereum is, of the Web3 internet, with dApps and all kinds of other infrastructure to support whatever you want built on top of it. It feels like kind of an underdog. Like we're just rooting for it to reach this new all-time high. Like a spaceman stepping off into a new frontier. I am so ready for ETH to have its moment in the sun. Sol, because I don't think it has had its moment in the sun yet. And we're about to get ETFs for ETH, for Sol, for XRP, more options for more layer ones. Conversely, layer ones that don't really excite me, gotta say, probably Cardano. You know, you've been here too long. What are you doing? I think they're doing stuff, but it's a lot of long-term stuff, and they found the infinite money glitch. Other layer ones are exciting. I love layer ones. You know, Stellar is something that I don't hold, I love what our friends at the Stellar Development Foundation are doing. I think just about every layer one has something worth looking at. But those are my three favorites: Bitcoin, ETH, Sol. Good question. What are we thinking about the Sol and ETH dip? Will they dip more? Are they going to bounce back? Bruh, great username. Thanks for the question. I think it's possible that everything bounces back, but it all depends on the macro picture that we continue to get. We're watching the Fed. We're looking to Friday. Jerome Powell has a speech from Jackson Hole where we're going to try and sift through the tea leaves about whether or not he is likely to cut rates at the predicted rate, cut rates at a more aggressive rate, or maybe do something in the opposite direction. It's very probable that rate cuts are priced in and could be a sell the news event, in which case maybe the bears will win the day and stuff will continue to dip a little lower. It's also possible that if he is more aggressive, if he seems concerned, like there is a need to take more or faster action on rate cuts, that we could be a little bearish and have a little recovery. I don't personally expect anything to shift until after a rate cut decision is made. I think we may go downwards a little further or bump up and down and do a little sideways action. I don't feel like the macro picture is there for the party to be over yet. Bitcoin and ETH ETF have had outflows the last couple of days, signaling that other folks are also unsure. Bitcoin sales have been high. Short-term holders have shown like a weakened conviction, but I don't think the macro picture has changed. We just got to wait and see. If you believe in those assets, this could be a good time to buy the dip. If you're feeling overexposed, then considering where we have been in the last year, 2 years, 3 years, you're at a pretty significant local high, and maybe you de-risk some. That's what I think. I know that Alex is swing trading his way to becoming a Solana millionaire, and when it dips, he's buying more because he doesn't think the party is done yet. And I know a lot of other people who are still long too. Most people I know who are crypto people are still hopeful for the next few months. And I don't think it's foolish hope. And if you wanted to inform your conviction, then one of the resources I recommend is, if you're interested in on-chain data, you got to check out a couple of sources. You can check out Dune Analytics. They've got a great newsletter that shows you a couple of different dashboards based on activity, volume, inflows, outflows, whatever. The CoinDesk Crypto Daybook America's newsletter is excellent. Every day they give you a summary of what happened in the last 24 hours and often include a lot of information about buys, sells, inflows, outflows, activity, new launches, things like that. And then I recommend the Unchained podcast, unchainedcrypto.com. They usually have fantastic guests wherever you listen who are very timely, talking about the news of the day, and they work here. Or they work in TradFi, or used to work in TradFi, and now they work here. They have a macro focus podcast. They have a podcast hosted by a couple of early stage and venture investors in our space, and the flagship show hosted by Laura Shin, who is the preeminent crypto focused journalist. It's fantastic, and it helps me get closer to the primary sources that inform my own conviction. And that's what we want for you, is not to feel like you have to borrow conviction from other people, but to feel like you're close enough to the information that helps you decide confidently for yourself. Good questions. And let me take this moment to tell you that if that's something you are like, hey, Evan, read that to me again, don't fret, don't sweat, you can catch the recording of this episode on your favorite podcast platform, on YouTube. And my friend, you can just jump in the community and ask me. It's the very first link at our website, rumshq.com, rumshq.com. Would love for you to let me know if you need a second read of the resources anytime. Joe Lynn says, when is the last day to submit the picture for William's silly chart contest? If you missed this, William Watson, our good friend, is giving away $100 in USDC to the person who posts the silliest chart in our technical analysis thread. Oh, no, not the technical analysis thread. In the public forum. Let me just show you real quick. For my folks in podcast land, you're looking at a screen share of community.rumshq.com. William has posted Will's Silly TA contest, win $100. Step right up, win a prize. Nobody, oh no, look, Ryan has posted Fart Man and his BTC chart. Got to show you this. That's honestly, for a guy who appreciates a good fart joke, that's a pretty funny chart. We have got Einar Antman. Investing lately has felt like getting pooped on by birds. Beautiful. And what do we got here? Oh, Jeff Rascal says, with the ups and downs of Bitcoin and crypto, Evan, Alex, and Will are always right there with the Rums community to see it through. I absolutely love it. He has recreated our logo on the chart. That is impressive. I would not call it silly. I would call it inspired, frankly. That's magnificent. So if you want a chance to win $100 in USDC, then head to community.rumshq.com and just search at the top. There's a little search bar. You don't even have to know how to navigate the website. Just start searching Will's Silly TA contest, and the post will pop right up. Boom. The only thing missing, my friends, is you. So thank you for the question. Definitely enter. Would absolutely love to see it. Bearded asked a quick follow-up question about Steakhouse. They are headquartered in Grand Cayman. That is interesting. It must be a crypto-friendly place. And indeed,
Correct.
You are correct. The Cayman Islands is broadly considered to be a very friendly place for crypto. A lot of crypto businesses are incorporated there. Many you know, love, and trust. Thank you for the question. 777 Jesus is Lord asks, can you explain staking on a centralized exchange? Yes, I can. First, a refresher. Staking is when you temporarily allocate your tokens on a proof of stake network, meaning a network like Ethereum, who processes transactions by all the machines who have a copy of the record of transactions, allocating some tokens, the network's token, to be staked. This means delegated to whoever the validator nodes of the day are. Anybody can become a validator node by putting up a stake of 32 tokens and by running a particular type of software on a machine that can handle the job. Because uptime is important, processing time is important. You wouldn't want to run a node for the Ethereum network on like a spare computer that gets kind of glitchy connection. That would not be useful to the network. You would probably be, we say, slashed for it. So that's what's happening in the background is somebody who has staked 32 Ether tokens, in the case of the Ethereum network, is randomly chosen from all the people staking and gets the right to process the next block in line of transactions. The block is just that page, if you will, in the notebook, the next set of transactions that we will chain to the others in the blockchain record so that we can have a chronological order of who owns what, who owes what, who's entitled to spend what. That's all the blockchain is, just a record of ownership. And when you stake your tokens, what you're doing is you're saying, I don't have a computer that can run the blockchain code. I don't want to spend the money and the energy. I don't have 32 ETH that I want to put up. That's over $100,000. But I would like to delegate some of my Ether tokens to a person whose machine is doing the work. You can stake 32 ETH, but you can also stake more. And in fact, the more ETH is delegated or staked, the more secure it makes the network, because that means it would require more ETH for an attacker to try and brute force their own version of the record. If I wanted to, make it look like I had 10 million trillion Ether tokens, in order to submit and get a transaction like that validated when it didn't match the previous record, and remember, if I'm stealing the money, it wouldn't, then I would have to have more than half the value of the network staked. I would have to be able to compromise more than half the computers on the network that can talk to each other and could say, wait a second, that guy's transaction is wrong. I would have to have a louder voice than all of them for any of the computers on the network to think I was legit, to steal, to forge, to fake. Very expensive, very hard. That's what's happening. And companies like Coinbase, they either have validator nodes themselves, or they have relationships to providers like Lido, which is a company that aggregates opportunities for you to contribute to another validator. Validators are all vying for your stake because the more ETH is staked, that also gives them more say, like a delegate at Congress might have when they have more citizens in the place they represent. More delegates, more votes. More people delegating ETH to a validator node, the more influence that validator has in governance decisions on the Ethereum protocol. And while staking is a way for you to earn passive income, for validators you stake with to earn rewards from mining blocks or validating blocks. It is also an important part of how Ethereum makes decisions as a network. And so for people who are concerned about that, the best thing you can do is stake. I think generally speaking, the rates for staking through a centralized exchange are lower because again, they're kind of letting you like ride on their coattails. And because in the environment of a centralized exchange, options are not the name of the game, right? It's like, hey, I'm Coinbase. We got everything. You use us because it's convenient, because you trust us, because we're secure. And so here's the deal you get. It's kind of like Facebook or TikTok or Instagram. Yeah, you love that all your friends are here. You love posting. So these are the terms and conditions. And if you don't like it, we'll see you later. Thank you. Like that's it. You don't get to negotiate with them. They set the terms. The terms benefit them most. If you want a better rate on staking, what you need to explore is self-custody. Self-custody is any hot or cold wallet where you and only you hold a copy of your private key. And because you hold the private key for, say, your Ethereum account, you can take your Ether tokens to any dApp on the network that might have the interface to recognize your private key. You could take it to Lido directly. And in a place like that, it's much more like a free market. Instead of being like Coinbase, the only provider, you're on our platform, you use our stuff. It's like you've come to a marketplace where there are many vendors in many stalls, and they are all vying for your ETH tokens as validators. So some of them are going to give you a better deal than others. Some of them are going to say, I'll give you a higher interest rate. Someone will say, if you stake with me, you can unstake immediately. And someone will say, well, I'll give you a very high interest rate, but you got to keep your stake with me for a minimum 14 days or something like that. All kinds of terms and conditions that you can start to explore on your own and that you should explore before you delegate your stake. Something that surprises a lot of people is that staking often requires some sort of lockup period. But it doesn't have to. So, staking on a central exchange, their ball, their rules. Good question, though, and I hope that helps. So, Conwar asks, if I transfer my crypto from Coinbase to a cold wallet, then they won't have track of my keys? That's absolutely correct. When you create a new cold wallet account, like let's say I get this Ledger device or I've got an Arculus and I sign up and I create an account, most of these cold wallets will come with a companion app. And the app keeps track of it. It's a more human, this is a terrible little tiny screen, human readable interface. What you do is you set up the device. Usually you create a PIN code, you back up your seed phrase. The seed phrase is used to generate any private keys your device might generate for you. It has the necessary technology to randomly generate private keys for every chain that it supports, every network, crypto network it supports. And if you want to create a new private key, you use your device or the app interface and tell it, create a new Bitcoin account, create a new private key or whatever. Each account is a separate private key. They are all linked to your seed phrase. When you move assets from Coinbase, it is like sending an email. If you send an email to me, That doesn't mean you know the password to get into my email. You never observe that as part of the email sending process, right? It's the same with sending assets to another wallet. Coinbase uses the keys that they have generated, like their keys. Coinbase has wallets and stuff, to send to your wallet address. They need your public address to do it, but they don't get your private address. And maybe I should back up here and just clarify that when you create a new account, a new wallet, a new key, what you're really creating is a key pair. You get a private key, which is for your eyes only. It's like the key to a mailbox at your apartment, where you can use it to take things out that people send you, or use it to put things in to send to others. And you get a public key. This is like a mailing address or like an email address that it's okay to share with other people. Just because they know your public key does not mean they can guess your private key. So I hope that helps. Good question. Birhanu and Dareb ask, what do you feel on Morpho? I think Morpho is a great protocol. I think they have attracted really interesting curators like Stakehouse, like Gauntlet. They've spread to a lot of chains. They facilitate a lot of volume, and their smart contracts are solid, generally speaking. I think they're a great place to go, whether you're an experienced DeFi user or you're new. As a lending and borrowing protocol, I think it's a strong place to start or go deeper. Dwanel, pardon me if I mispronounce your name, says, my measly $120 got stolen from me. Why steal from the little guy with nothing? Listen, $120 is not measly if it's meaningful to you, that's for sure. And unfortunately, across the cyberspace, there are people who make their living by scamming folks of all shapes and sizes. Many small accounts can make a big payday. Not sure who said that, but it sounds like it came from a fortune cookie. You should never trust anyone you meet on the internet, especially if they're offering you a get-rich-quick scheme, passive income, free Bitcoin. There are so many people in the crypto space, especially, who are just hunting on the internet. Some of them are impersonating creators you trust. Some of them are offering investment schemes that sound too good to be true. A lot of them whip up fake websites that entice you with testimonials, clever visuals that show all kinds of gains. But mostly, these are what are called pig butchering scams. And Dwanel, I would really encourage you to look that term up, pig butchering scam. It's one of the most prevalent scams in the crypto space, and they target crypto users because payments rendered in crypto are irreversible. So once they get your money, it's very difficult to get it back. If you have been the victim of a pig butchering scam specifically, and you have sent somebody money, or if you've given them your seed phrase, those secret 12 or 24 words that you should never reveal to anybody, then it's probably too late to get it back, but you should still report the crime. And I would refer you to IC3, the number 3.gov. I would also refer you to the Consumer Protection CPTPA. Google the term pig butchering scam, and I promise you the resources that come up will be the most helpful, in addition to IC3 and your local authorities for reporting the crime. Because even though you are not likely to get the assets back, you should still create a record of it, so that maybe we can bring the scammers to justice, so that we can help legislators write better laws by giving them more information about how these scammers take advantage of everyday people like us. And the last thing I'll say is be careful of, if you have been scammed, accounts that reach out to you on the internet posing as recovery experts, or maybe they don't reach out to you, but you see them in someone else's comments. You say, I lost $120, and they reply, did you get it back yet? Have you recovered your money? I can help. It is possible to recover. Whatever. Their name is cybersecurity expert. Something like that. It's a scam. Often it is the same scammers who took advantage of you the first time, who know that you're vulnerable, who reach out to you and say, hey, did you lose money? I found it on the dark web. I think I can get it back for you, right? They charge you more money. They rip you off some other way. Don't fall for it. Good question. And you're welcome. It's truly my pleasure. Check the Rise Up Scam Alert page. Also a great idea. I don't know that we have a Scam Alerts page in the new community home. Wall Street, if you're not there yet, what are you doing? You got to get into the place where we live. community.rumshq.com, or just remember rumshq.com and go to the very first link that says join our free community. Super, super helpful. Would love to have your posts and scam alerts there. Conwar asks, do we have to open a trust with Cold Wallet? I'm not sure if you mean like a trust, the vehicle for protecting your assets from seizure, or if you mean Trust Wallet. Can you clarify for me, Conwar? Let me know and we'll figure it out. And if you've got a crypto question and you're just sitting there waiting to ask it, this is your chance. If I miss it, the community is the best place for it, but I'm going to be here for a couple of more minutes and I really would love to hear from you. We say it's Web3 101 Wednesday. There's no such thing as a dumb question here. You would be amazed if you feel like you're going to ask a stupid question, how many people are wondering the exact same thing as you. I promise you. I hear probably the same 10 or so questions often. And I think they're great questions. People asking about, is this or that wallet secure? People asking about whether or not their crypto goes up or down in value when it's in a wallet. People asking about how to trade, how to this, how to that. There is no such thing as a dumb question, except the ones you don't ask. Did your teacher ever tell you that as a kid? Austin, thanks for the GM and good now to you, my friend. Which brand, Apple user asks, is my cold wallet? I personally started cold storage with a Ledger Nano X, which is this device I'm showing on screen right here. It's probably Ledger's most popular product. It's got two buttons that you use to navigate everything. And if I had to say, what's my gripe with this? I've got probably two big gripes. The first gripe is, even though this thing is pretty robust, I would not want to put it through the washing machine. That probably, it's not going to last forever. If somebody tried to like pry it from my hands, I don't know why they would. It'd be easy to like break. I could snap it in half. I'd have to go out and buy another one. And these buttons, this tiny screen, this is not the way I would prefer to navigate a digital experience. My eyes aren't great, even with my glasses. You gotta like it reminds me of if you've got a TV remote where you gotta press like, I don't know, you're looking for something on Netflix and you gotta search by typing in the title and you gotta press like up, 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 down, 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 left, left, right, right. You know what I mean? Like, okay. It's a pain in my butt. I do think Ledger is a great wallet. It's an OG. I trust the company. I think they've got a suite of good products. Their PR in the past has been just okay. I also have used for my personal assets an Arculus wallet. I think Arculus is a better user experience for me. It's an NFC wallet, meaning there is no like software inside this wallet. There's just a near field communication chip that interacts with the app that sets up transactions through my phone, and it's near field communication. If you are somebody who doesn't have a good phone, a phone that doesn't work well with NFC chips, you might not find this wallet to be ideal. What I like about this wallet is, just like Ledger, they give me my seed phrase. I like having my seed phrase. Just like Ledger, the device is secure in the sense that I could hand this to you without fear that you'd be able to get my crypto. You couldn't. Just like Ledger, I could run it over with a truck, throw it into a volcano, whatever. And then the second I got a new one, I could just use my seed phrase to load my private keys onto that new device. As with anything, your seed phrase, that is the information that represents your crypto. The wallet device doesn't matter. It's just an access point. The same way a computer is an access point for your email service. Your username and password get you into Gmail on any computer, even at the library, even at your grandma's house. You know what I mean? I do think there is room for improvement with cold storage wallets. I think any legitimate cold storage brand that supports the networks and tokens you use, which you find easy to use consistently well, is going to be the one that is best for you. And that will be different for everybody. Good question. Ken asks, how many tokens or assets should I have to be well diversified? How many do you have? I've heard a person should have at least 9 or more. What do you think? Great question, Ken. This is a tricky question to answer. And I think just like the cold wallet question, it depends on who you are. Generally speaking, I think most crypto users I know have too many assets. Tell me if this has happened to you. You get into crypto. You're excited about it. You buy some Bitcoin because you don't want to miss out. You feel like you're too late. Or maybe instead of Bitcoin, you skip to something cheaper, right? It's got more room to grow, you think. Bitcoin went to a whatever. Why can't insert asset here? XRP, Algorand, whatever, you name it. Cardano, I don't know. And then you look for confirming information. Usually people buy first, ask questions later. So they've got their Cardano or their Stellar or their XRP or whatever. And they have invested maybe a little more than makes them feel comfortable, which I know because they start looking for information everywhere and they're like, wait a second, I don't really know what happens to, do I need a wallet? How do I turn this back into dollars, right? You start sweating as you realize you maybe haven't thought about this. And then because you're searching for crypto information, you start to realize, oh my God, there's a lot more crypto tokens than I first initially thought. I bought Cardano because it was cheap, but like, now I saw this TikTok video about Algorand and somebody said it's the fastest, it's the cheapest, it's very secure. The whole state of California tokenized their driver. I better get some Algorand. Okay, wait a second. Stellar, XRP. Everybody's talking about XRP and they say XLM and XRP are to get. Oh my God, so I got to get some of that. Wait a second. AI crypto. There's AI cryptos. RWA. You know what I mean? That's the journey everybody goes down. And before long, because everything in this space is new, because everything in this space is interesting, and because they don't know enough about blockchain yet to really have a good grasp of like what problems it's actually well equipped to solve, they don't understand the history of our space and what has come before, what has succeeded or failed, what is likely and what is unlikely. What happens is they end up getting kid in a candy store syndrome. And now they've got a bunch of products, none of which they particularly believe in or could tell you why they believe in, if pressed. And they don't have enough time to manage all of it. But they're spraying and praying, thinking that they've got exposure to every narrative and something's going to explode. Often what happens to those people is they lose money, more often than not because they don't know how to use crypto yet, or because they don't have time to manage all those positions well. And because they are over diversifying their time, they end up missing out on profits that they could have had by learning how crypto works, the history of blockchain, what is or isn't likely, putting their venture capital hat on and evaluating these companies as businesses. And with their informed conviction, betting on what seems likely over a smaller basket of assets. The other thing too is a lot of these people have, they're playing with maybe 5 figures. I think if you're betting with less than $100,000, this might be a hot take in crypto. I think first of all, if your entire net worth is in crypto, you definitely don't need to be over diversified, especially if your entire net worth is less than $100,000. I think for most people who are that exposed or less, it would be better to hold Bitcoin. I say to everyone, like, if you're not holding Bitcoin and you're trying to make money here, what are you doing? What are you doing? And they say, but Bitcoin's so expensive. And I say, yeah, but like price doesn't matter. Just because something is 10 cents doesn't mean it's more likely to go to $5. Price is a factor of supply and market cap. And those things are affected by how much something is valued by its network of users. Apple is a valuable company not because its stock has a particular dollar number after the dollar sign. Apple is a valuable company because it creates products that people love and are willing to pay just about anything for, pretty much anywhere in the world, more than any of their competitors, except maybe, what, Microsoft? That's why Bitcoin is valuable, among other reasons. Just because something has a low price doesn't mean it's a good investment. And it doesn't mean it's likely to 2x, 3x, 5x, or 10x any more than Bitcoin. Bitcoin is, it's a proven asset. So you need to get exposure to that first. I know I'm veering from the question about diversification, but that's where I would start. Most people I know who are over diversified, many of them don't have Bitcoin, and you'd be surprised. I personally, I have a ton of tokens, but most of them are not tokens that I'm actively accumulating or investing in. I've been here for a long time, relatively speaking, since 2017, I've been buying crypto. And in terms of the tokens I have personally invested in, I was that guy. I was way over diversified to start. Had shiny object syndrome, bought a little of everything. And now I hold the only thing I dollar cost average and accumulate regularly, intentionally, is Bitcoin. I get ETH mostly to use it, but I have Ether investments. I have USDC that I can deploy on dips. I mostly am interested in buying what seems to be likely to go up in the short term from like the top 100 tokens. And then I take profits into USDC in order to buy something else that's on a discount and to buy more Bitcoin. That's what I do. So right now, for example, I've got a bag of Solana tokens, and I might do like Alex does and kind of swing trade them. It's going up in price, I'm going to sell some. It goes down in price, I'm going to buy some. Up and down. I did that with Morpho for a while. I haven't moved any Morpho tokens in a minute, but I did that 3 or 4 times with Morpho in the last 2 years. I bought it at a couple of cents or whatever, flipped it at $1.30, bought it again when it dipped below $1, sold it again when it went above $2. You know what I mean? That's the kind of investing I like to do. I don't do a lot of trading. I mostly accumulate Bitcoin. And honestly, that's the best investment decision I've ever made. Don't regret it for a second. If I had the interest in it, I feel like a more profitable strategy would be to trade more intraday. Like, I think I could make a lot of money doing that. I'm not that interested in it. It seems like a special place in hell to sit at a computer all day and trade and think and worry. But I think a lot of people make money that way. I think most people lose money that way. I think you'd have to know a little, you'd have to be a pretty savvy, sophisticated person. And I don't think most people are. Not that most people aren't savvy or sophisticated. I think most people don't have the self-awareness to acknowledge their own limitation there. A. Shakir says, can you please add subtitles to the video? Unfortunately, my friend, I cannot add them live. But if you tune into the recording, you will see that there is an option on YouTube for closed captioning, and your favorite platform will have subtitles also. X will have subtitles. Facebook will generate subtitles. And I really appreciate the feedback. If they're difficult to use, let me know, because we want to make the show accessible. Thank you for the comment, Shakira, and thank you for the question, Ken. Everybody on TikTok, bless your patience. I see your questions coming in, and I'm going to catch up to them. And we will do a few more questions before we round out the day. If we transfer the crypto coins to a cold wallet, is the price going to stay the same, or is it going to go down? Great question. This is one of my favorite questions to answer. Your crypto, the only place it lives is on a record called a blockchain. Right now, there are tens of thousands of computers that are running nothing but software for the Bitcoin protocol. Bitcoin is the name of a crypto token, right? A token that doesn't physically exist. It is a digital unit of information. It is also the name of a protocol, a piece of computer code that runs on many computers and whose function is to track the units called Bitcoin, units of data, ones and zeros on a computer screen, okay? The Bitcoin network, so we've got the Bitcoin token, the Bitcoin protocol, the Bitcoin network is tens of thousands of computers. Some of them are just supercomputers whose job it is to talk to each other and receive transactions from Bitcoin users around the world, transaction requests. A Bitcoin user like me goes to a place like Coinbase and turns my dollars into Bitcoin. They've just got piles of Bitcoin. The only way to get Bitcoin is either to be one of these computers who participates in doing these transactions and might be rewarded by the majority of the computers who decide, yes, you get the right to process this transaction. We will, in accordance with the Bitcoin protocol, release to you some information that represents Bitcoin. We will all add it to your account. Or you can buy Bitcoin from somebody who already has it. Like if I buy Bitcoin from Coinbase, in which case Coinbase submits a transaction request to one of these computers running the Bitcoin protocol, okay, to reassign some of the Bitcoin they own. The record of their account shows they own Bitcoin, and they are submitting a request to reassign some of that Bitcoin to whatever wallet I have generated, whatever private key I have generated, and tell them is the one I want them to reassign it to. So a couple of things are happening there. When you activate your Ledger device, your Arculus device, or whatever, it generates a random number in accordance with the Bitcoin protocol that all those computers will recognize as a unique private key. That's my username, my account, my private key. There are 77 followed by it's 128 followed by like 77 zeros possible private keys. We're never going to run out. If every person on earth spent the rest of their lives generating private keys, we wouldn't run out for billions of years. That's how many there are. There are more private key possibilities on the Bitcoin network alone than there are atoms in the observable universe. Some people, they ask like, oh, but when I join the Bitcoin network, what if I generate a key that belongs to someone else? You won't. You won't. You are more likely to win the lottery while being struck by lightning, while being eaten by a shark, and for that to happen like 77,000 times than you are to generate the same private key as someone else. So you generate a private key. You tell Bitcoin, you tell Coinbase, I want to buy Bitcoin. This is my private key. This is my Bitcoin address. They submit a transaction to reassign some of the Bitcoin they own to your private key. And if the computers, the Bitcoin network computers, whichever one of them receives their request, decides that Coinbase has the requisite permission to reassign some of their Bitcoin to you, what they do is they broadcast that to all the other computers on the network. They can all talk to each other through the Bitcoin protocol and says, hey, Coinbase is sending some Bitcoin to 0x123, whatever. And they all say, okay, great. We're going to update our copy of the ledger. That is it. No data gets sent to a wallet. Your Bitcoin doesn't physically exist. It is reassigned from one person to another or distributed via the protocol, the computer code, and added to the account of the computer running the network that gets the right to process a transaction. It's either earned as a reward or it is bought and sold by somebody who already has it, and it is only ever reassigned. That's it. It's never sent, it's never received. It doesn't matter if you access it from a Ledger, from a Trezor, from an Arculus, from a Coinbase account. Therefore, because the only place it lives is in this computer code, this record maintained by these tens of thousands of computers, the only thing that could cause it to stop going up and down in price is if every one of those computers went offline and people lost access to all their private keys. You can trade Bitcoin with a pencil and paper. It'd be difficult, but you could do it. The market is what determines the price. And the place your Bitcoin lives is just a record maintained by many computers. So it doesn't matter which wallet you access it from, which exchange you access it from, it will always change in price with the market. Doesn't matter if it's staking, doesn't matter if you forgot about it, doesn't matter if you never access it again. Whatever the market determines the asset we all access from that ledger is worth, every single one of them will be worth that much. Thank you for allowing me to explain that in long form, but I hope that helps you understand. Usually people are like, well, Evan, just tell him, does it go up or down in price? But you got to understand the context, because that helps you get a picture of like what we're doing here and why when it lives in a wallet, it doesn't really live there. You know, this is a novel thing. We're just reassigning ownership. That's it. You're very welcome. When do you decide to pull profit or hold? That's a great personal question. And let me say, as we answer this question, that it's just about time for our final questions, our last minute good jokes, words of wisdom. Nobody submitted a good joke to me in a while, but I have one or two for you today. Stay tuned for that. And if you don't get your question answered, I will remind you once more that the best place to ask, the best place to share, to learn, to grow, and we say rise up together, is the Rise Up community. It's totally free to join. Global community of learners. The only thing missing, my friends, is you. You can find the link to get there at rums, rumshq.com, and so much more. Lots of stuff there waiting for you. So when do you decide to sell? It really depends. When did you buy? How much did it cost you? Are you over invested? If you bought Ether tokens, ETH, last cycle at their all-time high, and you've been holding on to them since then, man, you've been holding on to an asset that has been worth less, and now it's becoming worth more again. You might have decided to sell at any point in time on that journey when you felt like holding on to the asset cost you more than taking a loss and using those dollars to buy something else. You might decide to sell when you feel like the market is turning around and the assets you're holding become a liability. You might decide to sell when you are up 10 or 20%, because where, my friend, in the world can you get an asset that's going to return 10 or 20% for you in a week? You know what I mean? And it all is informed by your conviction. If you don't know when you might sell, that could be a sign that you are over diversified, that you've got too many assets that you're holding on to that you think of as like one chunk. Like, I'm going to, I've got 30 different crypto tokens, and when there's a bull market, they're all going to be up and I'm going to sell them all. That's rarely what happens. I think it would be better for most people to whittle them down, get some Bitcoin that they're never going to sell, because in a world of dollars, Bitcoin will always simply be worth more. It might be worth less tomorrow than it's worth today, but check back with me in a year, and then check back with me in 10 years. If we're still using government money to measure primary, if that's the primary means by which we communicate about value, your Bitcoin will be worth more because dollars are going to inflate. Bitcoin's got a fixed supply. You know what I mean? The network of people who use it, if that went away, that could change, but that would take a long time. We would see it coming. So get some Bitcoin, don't sell it. And then maybe pick like one other asset. And it would be good to watch that asset like a soap opera at first. Get to know it. Get to know its history. A good one you might try is Solana. Another one you might try is XRP. And don't spend time learning about what people are saying about it right now on social media. Go instead to coinbase.com/learn. Go instead to a community. Go to somebody who's been here for, 5 or 10 years and ask them about it. If you don't know somebody like that, that's why you got to join the community too, because you need to be in touch with other crypto users. And you should ask them about the history of this asset, or you should find an interview on your favorite listening app, Spotify, Apple Podcasts, YouTube, with the founder of Solana or one of the founders of Ripple Network. You should learn about the history of it, and you should, maybe at the same time you're learning the history of the network, watch its price chart over that time. Use a website like CoinGecko or CoinMarketCap so that you can get a sense of, at one time, SOL tokens were worth $250 a piece. And that was their approximate high. That gives you context. At another time, after they had done well, Solana tokens went down to being worth $8 from for almost a year. They were really in the toilet before they got to that all-time high. And you'll see, that correlated to the collapse of FTX, the crypto exchange. Why did that affect the price of Solana so much? That's a great question to ask ChatGPT. And as you get to know these assets, the way you get to know the characters on a soap opera, that gives you context for how much they might move, for whether or not the place they hold in the world today is justified by what they have done. Is it overhyped? Is it undervalued? If it's overhyped, where is the price likely to go? If it's undervalued, where is the price likely to go? And on what time frame? When macro conditions in the world are like this, what has happened to that asset? And how does it tend to move in response to different world events, different crypto events? In which case, what do I think is likely? And if I hold that asset, therefore, what might be a good time for me to expect this is as high as it's going to go for this week, this month, this year, whatever period I intended to hold it? That will help you determine whether or not you should buy more, sell more, whatever. And you can do that for every asset you hold. You should do that for every asset you hold. Ideally, you should do that before you buy. And the cool thing is that over time, if you spend time in the crypto space, it's a pretty small industry. So you're going to see a lot of the same names. You're going to get caught up to the history. And then when a new protocol comes out, you are going to have a much better measuring stick for, should I buy it? Should I sell it? You won't just be like, oh, everybody's talking about this, I better buy it. No. You're going to say, oh, this is another layer one. It's not as fast as this. It's not as secure as this. Oh, they're doing a pre-sale. Oh, okay. You know what I mean? Like, you're going to have your own set of indicators that are well informed by history, other people's opinions, your own experience. Like, that's where you are walking to. And there is no rush to buy anything, my friends. You're not going to miss out on life-changing wealth because you waited to learn about what you were investing in before you bought it. That's a great secret. If you're looking for secrets and like alpha and tips and you're like, man, this guy talks so much, this is the gold nugget you are looking for, okay? Most people lose money in crypto because they don't take enough time to understand those things before they buy a token. It's possible to rescue an underwater position after you buy, but you don't have to be that person. And you are not going to miss life-changing wealth because you delayed. Sometimes when people in, my physical life ask me, oh, you're in crypto, should I invest? And I usually tell them, because this is like a conversation we got to have on a show, hours and hours of context and history. Like, if you really want to know what we have learned here, it would behoove you to like take a seat and let me talk to you. But if we're walking past each other in the grocery store, then, brother, sister, whatever money you're thinking about investing in crypto, put it under your mattress, go to Coinbase, learn, check out the Rise Up Morning Show, spend 3 to 6 months in a community of people learning about this stuff, asking your questions, reading what they tell you to, listening to what they tell you to. Then go back to your mattress, get your cash out. Anything you could buy at that point will be a better investment decision than anything I or anyone else could tell you today. That's it. Carol, I saw your comment. Thank you so much. I really appreciate it. 5 stars out of 5. One of the most informative Rise Up morning shows ever. That is such a kind thing to say. Thank you, my friend. And thank you, my friends. Apple user said, make sounds for Alex, please.
Hey, man. This is a gross misrepresentation of the facts.
Alex, how did you feel about me hosting a Q&A show today?
I am a big fan of this.
Yeah, I know. Now that you're not here, I can say pretty much anything and you just got to deal with it.
Not ideal.
But that's how it is, brother. Don't be sad about it.
It's just stupid.
Oh, come on, man.
I will absolutely die on this
Listen.
hill. My dad can beat up your dad.
I used to have a lot more Alex sounds on the board, but I had to make room for some of the other ones. So I might have to refresh my Alex sounds. We've also got I can't say I feel an overabundance of caution. We've got little old Brad is a dumbass. There are some real classic Alex sounds. One day, somebody who really wants to get me a great Christmas present will get me a Jim Cramer soundboard and a rocket ship like studio upgrade. If I had a soundboard that had about 120 buttons, I could probably fit all the sounds on it. All the sounds for now. I would probably fill that up too. And for Will, you got to give that. And what would Will say about this moment in the crypto market? He might say
it's the perfect time to buy.
I don't know if you would. And if you sell too soon,
You're a loser.
Oh my goodness gracious. Thank you, everybody. If you got a last question, a last suggestion, a good joke or word of wisdom, let me know. My joke for the day comes by way of my friends who are participating in the joke race for joke games today. Joke games for joke race. Strike it, reverse it. T-Rexatoris, I do believe is the username, submitted the joke. Why can't a T-Rex mow your lawn? Because they're dead. That one actually did make me laugh because I wasn't expecting it. I think I had heard it before, but when they said it, I was like, oh, duh. Obviously, I thought it had to do something with their little arms. So there's your good joke or your bad joke, depending on how you look at it. Your prediction from the 8 ball is HODL tight, HODL, hodl tight. Gentle Storm says, you also need a not financial advice sound. That is a great idea.
I will absolutely die on this hill.
Okay, my friends, we're cutting out early today. We got to go. But if you come back tonight, I promise you're in for a treat. We have got William Quigley. If you've never seen William Quigley, I absolutely hate it when people do this to their live viewers. But if you've never seen William Quigley, throw something in the chat. Put a 1 in the chat if you've never seen William Quigley, and put a 2 if you've seen him before, or some other number. If you have never seen William Quigley, I really would encourage you to go Google, YouTube, whatever, William Quigley Rise Up. Oh my God, all these ones in the chat. This is great. I feel like Calvin Hill. Alex, that was for you. If you've never seen William Quigley before, this is the co-founder of Tether. He's the co-founder of WAX, a successful venture capitalist for literally decades in Silicon Valley. Used to work in titles and licensing at Disney. He and his venture partner were in gaming for a while. His partner invented the idea of selling digital items in video games for money. Can you possibly be more of an OG than that? No. And it's the kind of guy that when he shows up and he's got something to say, you just listen. You just listen. He has shared pitch mechanics, what makes a great pitch, what makes a great investable company. He has talked about the use cases of blockchain. He's shared much about stable coins, the market, where we think the future is likely to go. And he is one of those people who I often say makes the complex clear. This is going to be tonight at 7 p.m. Central. 12 hours from the start of the show, about 11 hours from now. We're going to be live with him for 2 hours on all these platforms. And I'm telling you, we've got, I think we've got 5 past episodes with William Quigley. He is the most frequent guest on the show because we love all the guests we have. They're all friends of the show, but he might be my favorite. Just the way he clearly understands and can spend time talking about this stuff. Some people are long talkers, but you're glad you paid attention. You paid attention and you feel like you got a discount. He's one of those. And one of my goals for our ongoing learning sessions with William is that he will have a whiteboard and he will teach us. He does an exercise that we have yet to do with our friends here, where he will teach you how to build a blockchain on pencil and paper. Because when you know what a blockchain is, how it's built, what it's used for, and what its limitations are, every single time you hear a pitch from a crypto company, you're going to have a much better frame of reference from which to evaluate. Is this actually solving a problem? Is it just hype? Just because it's hype doesn't mean you can't make some money on it. But if you're looking for value, you'll be able to find it better that way. So thank you, my friends. Tune into the show tonight. Come back tomorrow. We'll have plenty more Rise Up. And if you'll want to binge in the meantime, then go to your favorite listening platform. Go to YouTube, go to Spotify, and search the Rise Up Morning Show. Or just remember RUMSH, RUMSHQ.com. Apple user, thank you for the questions. Carol, thank you for the questions. Ken, thank you for the questions. Bearded, thank you for the questions. All of you, thank you for being the very best part of what we do. Until next time, everybody, stay safe, be well, my friends.